Greetings, technology enthusiasts. I am Chandrahas and I am delighted to be here with you representing CyberBrainer. Do you not believe that the technology sector is advancing at an unprecedented rate, making this an opportune moment to acquire the skills that will facilitate your progress? With CyberBrainer, we are empowering you to take control of your own future. At CyberBrainer, we do not merely impart your interests. We assert that information is power, yet it is the application of knowledge that distinguishes you. Our courses are meant to equip you with essential skills, whether you are pursuing data science, understanding artificial intelligence, or delving into cybersecurity. Let us commence the session and seize the future today. Thank you.
In Stockpla as well, we have three different options. One is amount based, percent based, and unit based. Amount based is specific for scenario wherein there is a fixed monetary amount by which we want to give the stock's percentage. Like what I said, like what I showed yesterday, it is part of the base. Like 13,000 will be the amount fixed. Second one will be based on the salary like a base pay. That is like in the incentive one. It will be percentage, like 20% of their base pay will be their variable shares and kind of thing. And the last one is unit based. Let's take an example. There might be scenario wherein I want to just give 5 shares or 10 shares. Like a sign-on on retention. Usually we say like 10 stocks as a sign-on. Let's look into this one by one. Let me open all the three that we will have. I also wanted to know in case in our company they were like scenarios initially, like for last 5 years we sustained with ESOPs. And we felt like it is not no longer competitive in market compared to our competitors. We shifted from ESOP to somewhere like a VSOP. Like a phantom stocks plan. In such case we had ESOP. Employee stock option plans. And yes, ESOPs we were having it like once the options are vested and it will be available for exercisable and that can be monetized for them after the exercise period is over. Right? That is a basic thing. We felt like there is a lot of dilution rate involved for the company. In order to control the dilution rate right, my company abruptly stopped giving ESOP plans. Rather, we started giving VSOP. VSOPs is something like a synthetic stocks right. Ideally, the dilution rate will be really controlled. It can be managed at the same time. Employees also get a win where it will be paid out as a cash valuable. They need once they are exercising everything need not. It will not be given as an option like a trust agreement. What we do it in ESOP. We give the trust agreement where they get in cash while they go out of the company after many years. Whatever it's been lastly vested, that gets exercised. That is those are anything that is exercised or exercisable in VSOP. And you need not have any expiration date because for ESOP you have an expiry date. Like usually a stock it can be available for 7 years. After 7 years, it reaches towards the expiration date. The management is too much like. Managing the stock plans is like really cumbersome. Looking at that, we stopped the ESOP plan and we started getting into VSOP plan. How many employees or older employees who have been given ESOP plan? We still maintained that. At the same time, we created something called VSOP plan for going forward, whatever we are going to allocate. In such case, I know like my company has wanted to create, and we have the structure involved. How do I create the VSOP plan structure in Workday? That's what I wanted. normally see just like what you do now. Yes, but talking about as you mentioned, right? Like you don't want to have the explanation. In that, in case of the new scenario that you want to, you will create another stock plan, right? You will set up the right set of eligibility rules that you can see here. And apart from that, we're talking about the expiration date rule that you can see here. You can limit this. This is the option that you have to use, right? Depending upon your need, you can update this item accordingly. Absolutely. Because for ESOP had an expiration date rule, which is like 7 years from the date of grant. And likewise for VSOP, we didn't have actually an expiration rule because the stocks are once, that is not defined a period. And compared to ESP, the waiting period is pretty. That is like it's very intangible. And also whatever. When the employee leaves, he gets it converted into cash and he gets settled, along with his full and final settlement. This will also get cash to him and get paid out. And if in case the expiring is, if it's like a publicly listed company, the exciting time frame will be every quarter end. In such case, every quarter end the employee gets in cash with a value. We don't have an expiration date rule for ESOP. I just wondered, like if I'm going to create a new stock plan for the company, how I can add that stock plan or create a stock plan in one day. Number one, that is something I need to know, and how I'm going to also manage the existing older stock plans. It will help me to understand the resting schedules of the older stock plan and also available of shares and available of share number series of the older stock plan. I can utilize for the further stock plans that I'm going to create for the company. These are the things I wanted. Talking about if in case you want to make any changes in the expiration plan or anything with respect to any other plan that is already existing, right? First of all, what you're going to do here is you will make changes, you will edit those plans. If you want to make some changes in the expiration plan or in the resting goal, right, you have the liberty, you can do it. But some like, for example, you will edit that specific plan. Let's say I want to edit it as a first of all. Let me look at it. Let's take an example of a unit-based plan. This, people have just given an email like here. They have given a resting rule 3-year RSU is the grant type they have given as a target amount, right? That. Here, they do not have any expiration rule, right? Let's take an example. You want to add some expiration date to write. You have an option, right? Expiration date rule 10 years from grant date, 10 years from grant date, 1 year from grant date, 7 years. We usually use like 7 years from grant date. Because like let's take an example. There was an expiration rule of 7 years from the grant date. You can remove that. You have that option. And also I wanted to understand. Usually I have something where I can create the documents in my HCMin tool, where in case of any compensation, if there is a merit change in employee, we always send the merit communication letters like compensation letters. How do I create it in Workday? Like to get it automated and send it on one particular date from my HCMin tool directly to employees' IDs. Do I have an option in Workday? What type of document do you want to send? Usually when there is a revision in compensation for employees, right? Say like, let's take an example, annual compensation. When there is a merit change, once the merit change is done, employees get their new compensation. right? Based on the percentages calculated. After that, there is something to communicate. It is a right tool that we need to communicate to the employees by giving them the compensation letters, like saying like this is your revised to pay. And this is the breakup of your pay. After every merit cycle as an employee will be getting it. How do I create the merit letters like the compensation letters for all the headcount? And also for in case of stock plans, and also for trust agreements that I'm creating, right? While I'm granting the stocks, I will give them an option agreement. Like, hey, this is what your entitlement is. And this will be a resting schedules. You're entitled for these many amount of stocks based on the stock price and the date of your grant. And this will be your expiration date and on. There will be an amendment letter that usually for every employee, whoever we give the stocks, we give them. And also once they are ready for exercising right, we give them the trust agreement also, or like not like a trust agreement. We give them that exercisable agreement as well. Giving all the vesting schedules also monitored. We usually maintain something like a communication letter for all such compensation. Any changes, even €1 is getting changed for an employee, I have to give them a compensation letter communicated to them, right? I don't want to keep doing this. Anyway, we have such templates already in a stay, like we maintain a Google or Word document, but the thing is like I don't want to go and read it, and I don't want to do something like a macros function. You remember, in Excel we can do a macros function, where in Outlook, using the macros function, it will get distributed to each of the in-do just like in one-to-one discussion type of letters, right? I don't want to do, we are not using Outlook. I cannot get the help of macros here. I wanted to utilize Workday HCM just like how I do it for person you in person. You have an option where you can, just if I'm going to send a compensation letters, you can send it to everybody. You need not take a macros addition. And likewise, even in success factors, you don't need to send it to a macros. You can use it via success factors. It'll get into each of the employees, HCM and handboard. For example, if I am the employee, I can also maintain my own profile, right? Like I can apply for leaves and I can look for my absence request. I can see my salary plan and I can see my salary. I can download my salary slips. I can access the Workday HCM as an employee for my own profile. Under the documents, usually I also get anything on the compensation letters. I get that automatically uploaded there. How we do it is, usually we send like thousands of letters to all the 1,000 headcounts. And for each of the employees under the individual profile section, under the documents it gets uploaded. I need not depend on a mail, and I also give the employee the accessibility to download the documents whenever he wants it. How do I create the compensation letters? Here we have multiple options, right? Like we can create our drive. I'll come back to this later, right? Like we have option right, wherein we can create the document. Like you can design the template if there are, like you are mentioning about the changes that is going to happen or the new items with respect to the compensation, right? Let me see if there is any existing document. Normally, depending upon our requirement, we can create different type of documents. Let me see. And also for a certain amount of stocks, right? When I'm creating the eligibility rule, as I mentioned, I can just choose the eligibility rule as job level also. It will round out if I'm going on a percentage or amount based, whatever the plan can be. If it is aligned with the job level, I can choose it as an eligibility rule. The system will automatically filter it and give the allocation automatically to those particular employees alone. It's not always mandated to use. From the job level perspective, only right. You can use it on any basis, maybe depending upon the hire date, or maybe depending upon the organization or department, anything. It's not only about the job profile. Job profile is one of the items that I gave a brief to you. Let's talk like I'm giving a stock incentive plan. For the annual for 2023, I'm going to do it for 2024. And I know like my first eligibility rule will be employees who joined in 2023 on or before 30th of September. That will be my first eligibility rule. Second will be select the job level. It will automatically filter individuals' percentage range or the amount based range. For example, if I'm having a L1 is getting like 30% of their base and L2 is getting 20% and L is getting 10% of their base. In such case, the system will be automatically filtering if I'm going with the employee job level and also the hire date and also with the departments. That's what it by for kids. See, there is only one criteria that you can put in right. You can put in multiple criteria, either this or this or this or this. My question is, at the time I can also in eligibility rule. I can choose up to 5 to 10 criteria at a time. You can have a more robust. There is no limit in that. You can check out hundreds of criteria that you wish to have, but you have to make sure the criteria that you are creating is correct. Because we have to go with the frequency and also we have to go with the last promotion date. If I wanted to nullify the last promotion date, because we plan to do those who got promoted in off cycle. Mostly companies will do like we will nullify the merit cycle this time. We do a separate merit increase process for them. Because just because they were recently got a hike or something, we just bifurcate with our regularized model and we have structural increase. Sometimes we give the structural increase to SharePoint. And because some employees or leaders, they definitely don't want to get more into their base considering the taxable amounts. For taxable benefits, they also have it like a readily income to cash like deferred, or we can also go for stock plans for longer retention value. In such case, I can do that right. But one thing to keep in mind is all this eligibility rules should be created at the initial stage only. If you are going to make any changes at the later stage in the eligibility rule, in that scenario, if in case those items like the merit cycle or the plan has already been triggered for that worker, it will not work. What do you mean? For example, I'm just asking, my question is in 2023, I have a different eligibility cycles, right? The eligibility creation, whatever I created for 2023 will not be accurate for 2024, correct? 2024, I'm starting with my merit cycle program. I'm going to create a stock plan and I'm going to create everything for that particular number. I'm going to keep every those series as 2024 for my identification. While I do it itself, while I create such stock plans or while I create such compensation or bonus plan, during that time itself, I need to set the eligibility rule. And in case I wanted to edit the eligibility rule for later point of time in between, if there is some differences or we need to do some adjustments, right? In such case, how to do? I can edit the stock plan. You can edit the eligibility rule, but if in case that plan is already in progress with respect to some worker, then you have to cancel those plans. Let's take an example. The merit plan was already initiated. But after it was initiated later on, you got a requirement like you have to update it, the eligibility criteria. You have to exclude some workers from that. Because it happens usually in merit. In that scenario, what you have to do is, let me show you one simple. That event will be in progress for that specific worker. In that scenario, first of all, you have to go and you have to delete that event that is already existing. And after that, you can update the eligibility. Like normally we have mass cancel or mass reset. Mass cancel business process. Let's take an example. I'm talking about specific business process. Let's take an example of performance review or compensation. Like compensation review process that you started, right? Let's take an example. There were some changes that I'm supposed to do. What I will do is cancel for all of them. The review process I was supposed to do here, mainly what I will do is I will select the timeline like when I exactly started them. In that scenario, I will get the list of all those workers. And here, when you click no event written for this criteria, actually, there is no event right now in the system. As of now, this is the practice, tenant right. We do not have any compensation review, but first of all, once you click, this will give you a list of all the workers for whom the compensation review is in process. You will review that and observe, I have all the items, and you have to go ahead and you have to just give you a reason why you're canceling this, and you have to click. By that, it will automatically cancel from all the workers. And after that, you can update your eligibility rule and you can reinitiate the compensation review process. Absolutely. This is understandable. Now I understood. This is for the scenario where the event is in their inbox and they have not completed it. If in case some of the worker has already completed those events, in that scenario you have to resend that. You will not find those workers in the cancel mass cancel. In that scenario, you have to go to mass recent business process and you have to select the business process here. And you have to resend. Normally, it's always better. Normally, the best practice that we do here is, normally we test all these items at the, what is the logic of recent? Recent means deleting. And what is the difference between the cancellation and recent? I feel like both are the same, right? Cancel means let me show something. It cancels what it still keeps in the system. You can retry it. Let me show you something. Let's take an example. This is a worker. If you go and you go to the worker history job and worker history, here you will find list of all the events that is going on. That happened for this. If any event, any business process is already completed. Here you will not get an option of cancelling. Cancel means something which is already in progress and it is not completed. That is the reason why I am getting this recent option. If I resend, this completed item will be gone. This will be deleted. The reason why? It means like it never happened for him itself. It completely deleted. It shows like that event never took place. Correct. The reason why Workday does not use the delete option here, because we are deleting it. But still Workday is not using the word delete here, because this transaction will still be there. You cannot delete this event from his worker history. This will be recent. This transaction will be deleted, but it will still be there in the worker's profile or in the worker history. That's why Workday does not use the word delete, because delete means getting it off completely. Right? The thing is, like, ideally it cancels the event, but it'll just remain as a recent. This is about recent. Let me show you the cancel one as well. No. The thing is, like, in the event of recent, it resents it, but it wipes off the history, but it keeps the record. The record is there, right? Sorry. In fact, it wipes off the event, but it keeps it in the history. But if it's cancelled, it is cancelled and it is not. Even the history is not backed up. No, in cancel as well, you will have the history. Let me do some competition change for this one. I will go to actions. I'm just changing location. I'm not doing anything related to competition. I wanted to change this location. Let's take an example for this worker. This is the chain location. Are you there? This is getting submitted. This gets submitted means, let me see. Normally, if there is any event, let me see it something. Actually, the main issue with this practice, there is an error, right? Process definition error. Right now, if you go to the related actions, you can see this. There is a cancel option. There is a correct option. This cancel options will come into picture when the event is not completed. When the event is still at some stage or still it's in progress stage. At that point, you get an option of cancel. Whereas if in case the event is already successfully completed. Here you will get an option of reset. The main difference between cancel and reset. Cancel means something you initiated. It is not completed. You can cancel that if in case something is already completed. But again, there is a limitation with some type. Let's take an example. Employee is hired. Once the employee is hired and you want to cancel his hire, up till some point of time, you will be able to rescind that. But if anything comes into picture related to payroll, let's take an example. A worker is hired, right, and his first payroll is processed. He didn't get a pay, $0 payment, right, but his payroll was still processed. After that, he will not be able to rescind that transaction. It remains in the history. It will be there. You do not have any option to rescind that. And that scenario, you have to do only one thing. You have to terminate it. Now you cannot delete the payroll related data because his hire got linked to payroll. Now you do not have an option to delete that. In that, because mainly such scenarios happen like normally. What happened is in multiple scenarios like the worker. I understand like it happens even in. Worker didn't came on the first day. Right. And like no call, we call it as no call, no show. And it happened in Personia also. It has the same problem like it will, where we have to show that employee has been like terminated just because we cannot rescind. Now I got a picture. In such case, you can do the rescind option, correct? Absolutely. Fantastic. Oh, for the create stock option, you said like if I want to create a new plan also, I will go with this option. Right. And I will send the LGBT rules at this moment. At the starting point of time only. It's better because see, we do not want any unwanted transaction to be at any level. We want like all the transactions or all the items that we have in place. It's correct and accurate one. Why I'm asking is like for management board, right? The common stock option plan that we give for our management board members, right? Based on the individuals during the time of hire, based on individual employee contract. In Europe, we give that vicinity for the employee and we give the option for the employee to choose what they wanted. In my case, I have like 6 board members. All the management CFO, CRO, 1 CTO, right? All the C levels they have. Each has different plans as per their employee contract during their sign up as a board member. Soon as they get an option where 50-50 can be like 50% of shares out of the 100% of their variable share of their base right. They can choose for all the 100 to be converted into shares. And for few management boards, there will be like 50% of shares and almost like 50% of cash which is deferred. Different cash and few have chosen like 2/3 of different cash and 1/3 of shares. And on top of it, they also have like 300 sign-on bonuses for their exceptional performance. This is like on apart from the target, right? They have something as a board members. They have an additional allocation like departmental wise and also one for their role wise. For the role wise, we give them the L tips, which is like a overall like 300 L tips, like L tip shares, where each of our work of a higher amount. And also we wanted to give them that 2/3 and 1/3. Each of say, if I'm having like 10 members, I can manage it. I'm talking when I'm going with the larger plans. When I'm in my plan, the similar plan, is not only for C-levels, but it's going back to my SVPs. For the 50 SVPs or the 50 directors, if I'm having a 30,000 employee headcount, it will be like too risky for me to handle those things. How do you do that? For each of the stock plans, I'm having each one having individual stock plans option based on their employee contract. One has 2/3 of shares and 1/3 of cash, and one has like 50% cash, like different cash, and 50% of stocks. How do you maintain that under the employee? You can see this option here, right? Eligibility. Let's take an example. You have different group of workers, right? At the same management level in a different scenario. Within the target amount or vesting, anything changes, right? Within the same plan, what we will do is we will introduce different type of eligibility rules. Like for this eligibility rule, this is going to be the target amount. This is going to be the grant type. This is going to be the vesting rule. Apart from that, if there is anything expiration related, right? We mentioned all the items. Let us discuss this one by one. You will have a better idea. Also, I have one more thing. Usually, if we have like for all the investors, right? For example, sometimes we have like employee stock pool, right? We have two types, and also based on our investors, we have like say, like we have two investors, we have like two trust agreements, like two different group of trustees. We call it as trust pools. In case, for example, we have trust pool A and trust pool B as a company name, right? Few employees will be given the trust pool A and few employees will be trust pool B. Usually I get that in ShareWorks. How I get it populated in, how I can just define or create such option in Workday, where it also bifurcates based on the trust agreement or the trust name or pool name. See, as I said, right? For those two separate trustees that you are mentioning, we should have a different planning case. Because that's what mainly we segregate each and everything, right? Depending on the number of stock plans. But again, rather than having multiple stocks plan, if in case there is, like you mentioned, about trust A and trust B, right? I will create a stock plan for a trust, right? Namely segregate the options that I have here. I can define for the trustee and trust me within the same one. Likewise, what I will have is I will have limited number of stock plans. And the reason being why it's better to have limited number of stock plans, because if in case like every year there might be some changes that will come into picture, right? Whether we talk about target amount, anything, right? It will be easy for us for the changes that we are creating. Now go ahead. Coming back to the stock plan, as I said, like we have three different types. One is embed. Second one is percentage based. Third one is unit based. Talking about this stock plan, the options remain same, like allow target override means if in case there is anything, because not between the percentage. Yes, it will. It can be adjusted accordingly. Normally we use this checkbox for most of the stock plans wherein the chances are there that it will go over the target that we have. Because we will find the target at the bottom. If in case we feel like for this stock plan there are chances like it will go over, right? Because if we do not use this checkbox later on, we will not be able to override that specific amount that we want. At the initial stage, only we will be aware, right? Like what are the chances whether it will go over, right, or not. Depending upon that, we will choose this accordingly. talking about compensation matrix. A compensation matrix. Let's take an example. You want to give stock plans, right? Depending upon the performance, right? Depending upon the merit cycle or anything. And that's in our, let's say, like a total value compensation matrix. For example, I showed you the Excel sheet, right? That is not based on the performance. Out of 1000, if an employee is given 105,000 as a basic total compensation, where 92 is their base and the remaining 13 can be their stock plans, which is paid out in stocks. But it's still the part of the total compensation that is irrespective of the employee's performance. In such case, I have to choose the total value compensation, right? Normally what you're referring is if, in case you want to give the stock plan as a base of your total compensation, your total rewards, correct. That's what I'm telling. It depends in that scenario. In such scenario, I can choose the total value compensation matrix. It's not mandatory always that I will choose the compensation matrix, right? It will depend like the amount that you're talking about. Let's take an example that I'm not is completely based on. There is a specific amount that you want to give, or you want to give something with respect to the percentage, right? That is something we come into picture. This total value compensation matrices, like wherein we have, let me show you back. For example, if the employee's total compensation is 105 and 10% those unified is their equity by default. This is not entitled with that performance. This is something they have to get it. Either the person is performing or not. In that scenario, it's not mandatory to always use the compensation matrix, right? You have a percentage based on the stock plan, right? You can define. I can just 10% by default it is like 10%. I do. It will be much more easier. Got. That is not mainly we can. Now we are talking about competition. I have a question. Sorry to break you there. The 5 is the total comp and 92 is the base. If I'm putting 10% each year in the end, can you just scroll a little bit down? Can you scroll down please? You are showing somewhere around my target amount. In case I'm putting 10% here. Will the system take the 10% from the 92 base or from the 105 of total compensation here? Then you see a compensation basis. This is total base pay. Total base pay means it's 92. What if like total compensation? Here you can create a compensation basis. You can choose the total whatever you have. It's not always mandatory to choose the total compensation. You can choose the total compensation part. Can you just this is? That's what? Can you just show the total compensation? This is what I wanted because always we go with the total compensation, total target compensation, TTC. We don't go with the base salary. Some companies use base salary, we use performance. Performance percentage is based on a base salary, not on a total compensation. But this is part 13,000 is a part which is 10% of the total compensation. And the remaining is 92 gets paid out in cash. That's what I'm saying. In case you don't want to consider based on the base pay, you can go with the total compensation. There might be different scenarios, right? Like if I give you an example of India, right? They have the basic pay, right? There are different components by which they want to give. Depending upon our need, we can change this compensation basis. This is the mandatory fee if you see, because this is what something on which the amount target amount is going to be decided, because giving target percentage is 10. That will not make sense if I do not have any base point. Right. I mean, India also, sometimes we use HRA as one of the compensation bases. Because to reduce the tax liability for the employees, we also go with the HRA. Correct. You can have the HRA's basis. These are the built-in options that we have in the compensation basis. You have an option to create it as well if in case you want to create. Create a considerable compensation basis. You can create a loan. You can define the eligibility rule and the functional area. You have to define like wherein you are going to use this, whether it's going to be benefits compensation as we are going to use in competition. I will define that. And talking about this compensation basis that we are going to create, right? Where you are going to use, whether you're going to use in the stock plans, right? Whether you will be using the salary plan or a period salary plan, allowances plan, commission plan. There are different. This period salary plan more like a different. Like an approval basis. What is the period salary plan? It will be like accumulated like an approval. Like futuristic payments in multi-year targets. This is how we can create. Like normally, there are different calculation bases that is available. Like if in case you want to define the amount, right, depending upon some guaranteed basis or variable basis on a fixed basis. Like as well, we can create, we have the adoption. In case if I choose the calculation basis as variable basis, it will automatically calculate with the given threshold values of the variable like 100% or something as a min and max of threshold. Got. Thank you. Coming back to the stock plan, we can use the compensation matrix in different scenarios like normally, as I said, right? Like if you want to use this stock plan at the initial scenario where you want to offer this stock at the time of hire, right? And that's not, you have no need to use any compensation matrix, right? You can use it. Unless this is not based on performance-based stock plans, we need not use the compensation matrix. That's what you are going to say. Got it. Talking about the first one. The first one is talking about the flat amount based. Here you will not see anything mentioned as amount based. This is something which you have to understand. In the amount based here, you can see we do not have compensation basis because this is the stock plan that we are referring. We are going to give them some certain amount like 100,000 or 10,000. We have to define the currency. Right. After that, we will define the grant type, whatever we wish to have. Let's take an example. Here we will define the eligibility rule if in case there is only one item. But let's take an example. I'm creating like new hire stock plan. This is like sign on. Can you mention it like sign on? Management level. Or anything. For this group of people, if there is any. There are three options. One is stock plan defaults, stock plan profile, stock plan documents. Let's discuss about stock plan default. If in case you have only one item for all the SMAs that you have. Right. There is a fixed stock option for the target amount of $10,000. Right. You can define the currency here. The frequency is going to be manual annual. You can define the grant type. Vesting rule. Let's keep it like 4 years. Actually, for incentive stock options, we never have a vesting rule. It's not mandatory field, right? You can ignore that. If there is any expiration date rule, you can mention that. For example, the 10 Solensen. The 10 Thalesen will be immediately vested for that particular year and can be encashed for them. But the thing is, like, we can have it like an exercisable rule, like quarterly exercisable, that can be created. For example, the 10,000 is a backloaded vesting. Or let's keep it like a front-loaded vesting. 10,000 worth of share. Today, the share amount as a public stock is 777 euros. Let's keep it as 7 USDs or round up like 10 USDs for a better math. Per stock value is 10 USD being a public listed company. And this management board is given like 10,000 worth amount 10,000 USDs. 10,000 USDs worth of shares will be calculated. 10 into 10,000 you calculated. There will be a specific amount like 100. 100 stocks will be given for them. 100 stocks will be given for this employee at every like 25th, 25 at every quarter. That is how we can create that grant split here. In such case. Sorry, what did you say? The grant. For example, the stock is worth 10,000 as a public listed company. The target amount is 10,000. The employee is eligible for 100 grants for that particular annual. Right. As an incentive stock option, we are doing like a front-loaded vesting. First, like 2 times he gets 25. First he gets 15, another 15. And the second month onwards he gets on the third and fourth quarter. He gets 30. In such case, that is called as front-loaded vesting. The initial vesting will be lesser at the end. It will be like too much of the value. In such case, how do you give the grant split for the employees to be paid out periodically in every quarter? Normally that's not. What we can do is, we can keep this default as it is. Target amount, it's not at all a problem. I'm asking the split money. If you talk about the stock loan profiles that we have, let's take an example. Here, I can segregate it further in multiple options. Right. When the worker, can you see the eligibility? When the worker is joining, at that point of time, this is the amount that he is going to get further. Right. And for this specific one, he will have a vesting option, right, or any expiration date once the worker completes 3 months quarterly. What is the next amount that he is going to get based on that? The question is, the quarterly will be under the vesting schedule option or in the eligibility rule option. You are referring, like talking about the vesting one, right? Like how they can vest the whatever amount they are getting into multiple ways. Correct? Like every quarter they can vest around 25%. Here, the ideal option will be 1 year quarterly. The first option, the very first option. Like, for example, as I briefed you, right? Normally within this, what happens is, if you can see here 5 years 20% vesting. In a similar way, we can create our own vesting option. Like for example, let me make changes to this. Did you check whether you have the Workday community access? No, I wouldn't have to check. If you see here in Workday, right, there are different options that they have here, like for vesting, right? Let's take an example. What is the vesting schedule that you are referring about? Let's say like a front-loaded vesting, 1 year every quarter, front-loaded 1 year every quarter. Normally, you can see here. And I also wanted to define the percentage because front-loaded will be the first 2 quarters will be paid with lesser value. The last 2 quarters we pay like higher value. That is how the front-loaded starts. The limitation that you are talking about, right? If you see here, right, stock vesting schedule, the options that we have here, we created. After that, the vesting that comes into pictures, right, like talking about the amounts that gets loaded into the worker's profile, right. For the vesting purpose, this is mainly done through the EIB. I will do one thing. I will check. I'm not sure whether we have the existing EIB. It will be wonderful because that is something we do it commonly here. Because any vesting stock plans, we need to understand whether it's a back-loaded or front-loaded vesting, because that gives us a creation of whether it's a retention part of the retention plan or not. I'll brief you about the EIB in the next session. Because it will not be done right now, no worries at all. Let's close this first. And in stock plan profile, I can create a grant split based on the grant type under eligibility rule and also the vesting schedule. The vesting schedule, like how you taught me right now, like you can create a vesting schedule and you can do that. Apart from the fact that you have any expiration date rule, right? We can choose that. Similarly, what is the percentage of target here that is mentioned here? This will be, we already created the target amount, right? The target amount that we define here, right? Let's take an example. Here we can define the percentage of target, whatever are supposed to be. Let's take an example that is supposed to be delivered. This is the target for every quarter. This is what I wanted. This is what I was asking. For example, the 10,000 worth stocks, if the stock price is 10 USD. The employee is worth of 100,000 stocks, which will be split into 25% each. Like first month, he'll get 25. Another quarter, he gets 25. Another quarter, he gets 25. Another quarter, he gets 25. Now I want to have a breakup here. I don't want to give him 25 worth stocks in each quarters. I want to give him only 15 and 15 in first 2 quarters. And the last 2 quarters, I wanted to give the double like 30. In such case, I can just add the add option, right? And I can create the rule. This is what I was asking. Because this is what a front loader or back loader investing, I can do it. I need not create something abruptly. It is very well there just as an additional option. We're talking about this document part, right? If there is any reference document that is supposed to be used, like the compensation letters I have mentioned, right? Like the stock letters, those will be automatically there. This is the default document, a standard document for all the workers who will be getting this as this stock plan, right? Like a template, correct? Here you have an option to auto default anything, right? Let's take an example. Normally, if you talk about the offer letter that you get, right? When the offer gets generated, that gets generated for a specific employee, like his name, his details and everything he started. Everything will be mentioned. That will pop up automatically. Here that option is not available. Here it will be a common document, right? With respect to the stock plan, which will go to all the defined worker, whoever is eligible for that plan. It will not. We meant to say that the letter is not specific to one particular person. Listed his name. It will be like to whomsoever. Right. Kind of thing. That is what my question was in the initial when I asked like how we create a compensation letter and write it through Workday for all the employees in one go. Because this is like more generic letter. You wanted to have some another document which goes to separate workers with their name and all. That's what I thought. No, nothing is like. See, there are like two things. Whenever there is a merit cycle, right? Once the compensation has changed during the merit cycle for the employee is entitled to know what is this new compensation. We usually circulate a compensation letter. That is a closure of saying like this year's compensation, the merit annual cycle is over. And this is what you have got as your merit. By we close the cycle by completing it to a compensation letters sent to individual employees. Usually how we do it in using success factors is in success factors, there is an individual thing where the system will address just like how you send individual letters using micro macros, right? Through Outlook here. The system will do it using Google and the success factors will send by automatically typing individual names and their ID and their new position or the existing position they are under. And they circulate individual and extra forms like compensation letters and send it to their email, or it will also get automatically uploaded in the employee's document folder. If you are an employee, right? Once you got your merit cycle, your HR will be sending it to your Workday profile. You will be as an employee. You can check your absence. You can also do your time tracking and all in Workday, right? As an employee of the company. In that you also have something called documents where you see your monthly salary, pay slips, and also other documents like your increment letters, incentive letters, those letters. Usually we create it as one go and send it to the employees. It gets restored in the employees document folder. I wanted to know how do you send it? The same things. If in case I'm sending any stocks, if you're awarded any stocks, those stock letters also should be there available in that employee compensation document sector. How I do it? This document, we are looking into this, will be available in the workers profile document section. Absolute. How I do it? Normally, if any worker will have access to the document section, right? Like normally, if you talk about workers, they have the access to this document section that we showed you. Like for example, I know where the document section is, Raj, and my question is I have to create as a compensation person, right? You're talking from an employee perspective. I don't want you to talk from the employee perspective. I wanted to. Let's flip the cards now. I am the employee. You are as a compensation manager. You're going to send me the compensation letter of what I'm getting this year. How do you create that? That's what I told you, right? That is being done. We have to configure the entire document, right? That happens through the normal business process, right? I will show you like. Usually we create it during the integration part itself, right? The documentation. It's normally we have an option like we can create a document in the drive. That is available, right? And then we can have those respective fields that I mentioned to you, right? That is available, right? If you want to define any specific change in compensation, the workers related information, we can have a proper template type, right? And I also have a question. I do not have access here, but I will try to. But I will show you like how that is created in the next session. Because I don't want this to be falsified also. Usually we have versioned URLs. If you would have used DocuSign, you have DocuSign's URL just for encryption. Usually such documents can be auto-encrypted using the HCMN tools we are using. Using the version aspects, I just wanted to create such compensation letter that at the end of the corner of the sheet it automatically have the version URL of the Workday. It is like more encrypted. The document is encrypted and legit. This is what I wanted to do. Today I will practice this stock plans and I'll come back with the questions tomorrow. In the recent base plan, there is nothing yet for the percentage base plan. You have to define the compensation basis, right? On which basis you want to decide or define the percentage. In case of unit-based plan, you have to clearly. You will not have any other options, right? You just have a composition matrix. If you want to use, or else you have to define the target shares and then in the form of numbers. That's the difference. Major on this the different type of plans. Got? Please do like, share and subscribe to our channel.